Most investors think they know how the Bitcoin cycle ends, but in 2026, the rules of the game are changing fundamentally. What is up, everyone? Welcome back to tokns.fi. Today, we are diving deep into the Bitcoin price prediction for 2026 and analyzing why we are entering the most volatile phase of the post-halving cycle. By the end of this video, you'll understand the macroeconomic triggers and on-chain data that will determine if BTC hits a new all-time high or faces a brutal correction. We've been tracking these cycles across the TX ecosystem and analyzing data on coherencedaddy.com to give you the edge in this market. The 2026 cycle geometry. Historically, the year following a halving is where the real fireworks happen. But as we move through 2026, we're seeing a shift in liquidity. The traditional 4-year cycle is being challenged by institutional adoption and ETF inflows, creating a left-translated cycle. This means the peak might arrive sooner than expected, making the current price action deceptive. If we follow the Fibonacci extension levels, Bitcoin could see a massive surge, but the danger zone is when retail FOMO hits its absolute peak. The macro danger zone. Why is 2026 dangerous? Because we are fighting the global liquidity cycle. If central banks pivot toward tightening again, the risk on assets like Bitcoin will feel the squeeze first. We have to look at the correlation between the DXY and BTC price. When the dollar strengthens, crypto typically suffers. Furthermore, the integration of DeFi protocols is creating new leverage points that can lead to systemic cascades if the price drops too sharply. The TX Ecosystem and Diversification. While Bitcoin is the king, smart money is diversifying into the TX ecosystem to hedge against Bitcoin's volatility. The TX ecosystem provides the infrastructure for the next generation of blockchain applications, moving beyond just a store of value. By balancing your portfolio between BTC and high-utility projects, you reduce the risk of a total portfolio drawdown during a 2026 correction. Check out the latest ecosystem updates over at toknsfi to see how these assets are correlating. The final price target. So, what is the actual Bitcoin price prediction for 2026? Bull case. If institutional demand continues and the TX ecosystem drives more blockchain adoption, we could see Bitcoin breach the six-figure mark comfortably. Bear case. A sudden macro crash could send us back to the 200-day moving average, potentially wiping out late-cycle longs. The key is to watch the funding rates. When everyone is long, it's time to be cautious. 2026 is a critical year where historical cycles meet new institutional realities. Watch the DXY and global liquidity to time your exits. Diversify into the TX ecosystem to protect your gains. Bitcoin is no longer just a retail experiment. It's a global financial asset. Stay disciplined, don't chase the green candles, and always keep your eyes on the data. If you want to stay ahead of the 2026 market, hit that subscribe button and join the tokens.fi community. Smash the like button if you found this analysis helpful. What is your personal Bitcoin price prediction for 2026? Let us know in the comments below.